Check. Yeah, okay, we're good. Always a bit of a random choice, the entrance music. You don't know what you're going to get. I need to set it for them next time. I got a couple of songs I like. When I look into the crowd today, right, I see a lot of familiar faces, and it kind of makes me feel nostalgic in a way because a lot of these faces, we've been doing business together, we've been doing deals together for what is now maybe a bit more than 2 years, or about 2 years. Now, 2 years seems like a very short amount of time, right? I mean, that's only 24 months. But at the same time, you looked at what has changed in the past 24 months. Look at how Tech in Asia themselves have changed. They changed from Startup Asia. I was speaking at Startup Asia once upon a time, right? Yeah, it was Tech in Asia. We look at the amount of Indonesian startups, the amount of funding in this ecosystem, a ton has changed. And so David put me on the spot and said, okay, I want you to reflect on what has happened and tell us what's next. And not only he did that, he put me in the spotlight to talk about that. So that forced me and our team, we spent a couple of hours trolling through a lot of data. We're close to doing 100 startup investments in the past 20 months in Southeast Asia now. Until now, we haven't even published a list. We don't even have a website of who these companies are, how they're doing. So we sat down, we looked at what's going on within our portfolio. We wanted to look at what lessons founders have learned. What are the characteristics of the top companies within the portfolio? We want to see what patterns we have with co-investing. And so with all of this, that's how I want to spend the next 14 minutes I have with you. And because there's going to be some good stuff, I'm going to be a little bit fast-paced with this. So I hope you guys are ready. So get your seatbelts on. A lot of you who are not here, just a very quick intro. Sorry about this. Okay, here we go. So we're 500 startups. We're the world's most active seed stage investor. Globally, we've done 1,200 startups in 50 countries in the past 5 years. But beyond this, what we see with all the investment activity done is we see this world's actually fundamentally really fucked up. And that's what gets us working hard. That's what gets us waking out of bed and doing things. So what it really is so fucked up about this world, I'll tell you that everywhere we go, everywhere we travel to invest in deals, we come across people who are smart, driven, capable, and we look at them and say, wow, these people could build really big and awesome companies to change their communities and their countries. But the amount of capital that's available to them, the amount of knowledge and networks which exist at their disposal is nowhere nearly the same as what we see in Silicon Valley. Now, I'm not from Silicon Valley. My name is Khailee. I'm a managing partner at this firm. I grew up in Malaysia, and I know exactly what that feels like. But it's not to say we can't build great companies. All of us have. All of us still build with or without it. But you think that the world would be a better place if all the smart and capable people in the world could actually have access to money, have access to knowledge to build the companies they need to build. Okay, I think the clicker isn't working.
Can you click this way? Yeah.
This way? Oh, sorry. Okay. I point at you. So this chart kind of summarizes the fucked up world I'm talking about. Smart, capable, driven people everywhere in the world, the answer is yes. Access to money to build companies, knowledge, networks? No, not necessarily. Now, this is the world that 500 Startups is trying to change. Just point at you again. There we go. If there's a kid in Medan right now, or Lithuania for that matter, right, who has like the chops to build a company that they see that can change something, we want to give them money. We want to give them access to people that can help them. We want to give them the knowledge to spend that money well. And so with all of this stuff, although we've done only 1,200 deals, there is still a lot of deals needed to be done. And we can't do this without you guys. So with this, we started a little bit 2 years ago. After I built and sold 2 companies, I was doing a lot of angel investing. And I decided to, I saw that this was a big problem I wanted to solve. So I started an experiment with 500 startups. We raised a little bit of money. We set up a Southeast Asian fund called 500 Durians. And we made our first investment in June 2014. The first 50 startups was done 12 months later. In between, sorry about this.
Okay. I'm going to click for you.
Yeah, okay, cool. Yeah, so in between this, like in the first 20 companies, just to share some, oh man, it's a bit kind of blur on stage, so I'll just read it out to you. 11 out of our first 20 startups have raised a Series A or more. They include Grab Taxi, Bukalapak, Carousel, iMoney, ZipMatch, Playbasis, Echo, 99.co, TradeGecko, Pomelo, ClaimD. 11 out of 20 of our first bets have already raised Series A or more, and that's just over a year. The 12 months later, out of the first 50 startups we invested in, more than half of them, 52% of our first 50 companies have raised more money after their seed round, including seed extensions, not necessarily Series A. And I want to talk about that. But of course, like in this 12 months, 6 of them look like they may fail. They're not officially failed yet, but you know they look like they're still fighting fit to stay alive, but they're just not as like, they're not killing it with the rest of them, or at least not yet. And all these companies, these first 50 companies, are spread across enterprise and SaaS, 18 companies in there, and the rest of it across e-commerce and marketplace, another 18 companies, on-demand, 4 media companies, a couple of lead gen companies. And 8 months later, we've done another 50 companies. We've already committed to these companies. The closings will happen between November and December. We hope to get all that shit done by Christmas, and we'll have done with 100 companies. So they are currently kind of evenly spread out across the region, more or less. A bit of heavy, like 29 companies in Malaysia, Singapore 20, Indonesia 20, Thailand 10, Philippines, Vietnam, Myanmar, and some international companies operating in Southeast Asia, like makes up for the rest of them. Now, for the next 50 startups, I predict they'll come from anywhere. I never really cared which country they came from. I just cared about a lot of other things, which I'll talk about. But yeah, maybe it's 50 more companies, maybe it's 100 more companies, I don't know. We'll see what good deals come around. So what have we learned from all of this stuff? First, let's zoom in on Indonesia. We've deployed $2.5 billion, roughly, across Indonesia into 20 companies. Not all at the same average check size. This is just some logos of a couple of companies there. There's a lot of companies which I didn't capture in there. Some because it's not announced, and I felt bad because I actually forgot about one company. I was just like texted this morning. He's like, hey, what about me, dude? I'm like, shit. So it deserves to be on a slide. We've been having founder meetups every 2 months organized by founders themselves. Those are some pictures of it. And the one on the bottom left is office visits. In this trip in Indonesia, the first 2 days, Monday and Tuesday, I clocked in 17 meetings. Most of them were portfolio. So the Indonesia portfolio is very loud and alive. But again, this is so little of the kind of work that actually needs to get done. I should be doing hundreds of companies in Indonesia at the rate Indonesia is going. So I'm actually too slow in Indonesia. So we discovered that seed, the future of seed, what is seed investing? Seed is like a big word. You got to break it down into 5 stages. Idea only. You launch your product. You get a bit of early usage. Maybe you've got good usage that proves you got product market fit. That's in the 3rd stage. The 4th stage is that you've got organic growth that looks really good. On top of that, on the 5th stage, you've got predictable growth. You know how to spend money and get customers. Now, across all of these stages, I invest between stages 2 and 4, and that's where the sweet spot where we play. That being said, though, what I see is that I can invest in stage 1 and stage 2, and instead of raising an A after that, seed extensions and bridges are very, very normal. 20% of my first 50 companies had used a seed extension or a bridge to actually get them to a really big A. Like these days, it's like not cool anymore to do $1 million A. People want to do like a $5 million A, a $10 million A, right? So they do a little bridge in between to get to the next stage. What else have we learned? These are reasons why we cut the check. We cut the check sometimes because product market fit is really apparent. Sometimes because there's a proven model. Sometimes because the founders have a unique advantage. Sometimes there's proven growth, as I mentioned earlier. But there are also other reasons which didn't make it into this top 4 reasons. So the top 4 reasons, product market fit ranked top. At 59% of the time, we cut the check because there is product market fit. However, when we analyze our top companies, the companies who have raised enough money in a short amount of time or had enough business traction in a short amount of time, we realized that product market fit wasn't really that important. We realized that the proven model seems to have the higher success rate so far. I mean, naturally, people want to fundraise on things which are proven. But more than that, we found that product market fit alone, without other reasons, out of 15 deals we've done primarily on product market fit without enough of other reasons, those 15 companies didn't make it to our top cut. Whereas companies who have all 4 reasons, product market fit, proven model, founders advantage, and proven growth, this has given us the biggest returns. Grab Taxi and one other company, which I can't disclose yet, are the only 2 companies that have all 4. Now, the second company I just invested like 2 months ago, they're in their 4th month of operation and doing $3 million run rate just in one country. It's an e-commerce company. So they had all 4. But what's even more shocking is that even with 0 product market fit, with 0 proven growth, all we had was a proven model and proven founders with an advantage. 6 out of 6 times I bet on this, all 6 companies made it to the top. I'm talking about like Happy Fresh, K-Fit, those kind of companies. I bet on them on an idea, knowing the model is great and the founders are definitely the most relevant to do it. So I hope that gives you some tips for a lot of other co-investors out there and some mistakes. That being said, the top companies, we don't know their top till they have exits, so that's a bit of a disclaimer. But at the same time, I've got a lot to be proud of, but a ton of stuff broke. We took this move fast, break things a bit too seriously, and we broke like a ton of shit, right? I was, 2 days ago, I was at the East Ventures meetup, thanks Wilson for that, and then I bumped into this founder. He was like, hey Khailee, let me tell you what I'm doing, man. We've got this, we're doing this, we're doing this. I'm like, dude, that sounds a lot like Kudo. And he looked at me, Khailee, I am Kudo. You invested in me a few months ago. I said, yeah, I know I invested in Kudo, but you don't look like, you probably are a founder. Because I've only met him once before I invested, and I don't know how he looks like. Right? I'm not trying to say Indonesians all look the same, because I look just like you guys, right? So that'd be a comment on myself. But, but it's like, sometimes I invest so quickly with so many companies. It's true that not all the companies have the same amount of love. In fact, the companies which had the most amount of love were the ones who actually called me on the phone, WhatsApped me, and reached out to me. Those who don't reach out to me, I didn't reach out to them. But that's not an excuse. My new motto is move fast and fix things. I want to fix that. I will tell you exactly how I want to fix that and how I want to upgrade everything that I've done with my team in the past 2 years to the next level. My vision for a seed venture capital firm in 2016, I've thought about this a lot and spent a lot of time with my team cracking on this, is designed based on the user experience of a founder. How does a founder feel pre-deal? What does a founder need during the deal, 1 week after the deal, once they start spending their money and when they approach the next raise? How do they feel? Firstly, firstly, to fix the Kudo problem, is that founders not reaching out to me is not an excuse. I set up a startup concierge with team members to reach out every one of my startups once a month to ask them, okay, what can I do for you today? What, do you need some advice on something? Do you want to get connections? Do you want to hire somebody specific? Once a month, I'll have my team reach out and they'll come back and we'll try and find answers from within the network. Now, this one is not rolled out to all our portfolio yet, just selected portfolio, so it's in light green. The stuff which is in like thicker green has already been rolled out to a lot of people. This is free legal documents during the pre-deal stage. During the pre-deal stage, a lot of founders have the ideas, have the business, but they don't have an entity. Lawyers charge up to 10K US dollars. I had a quote, a startup came to me for preference shares docs, 50,000 US dollars. Doesn't make any fucking sense. That shit's gotta stop. So in the US, we gave like KISS documents, keep it simple, stupid documents, widely used across the United States. Special thanks to JFDI, Meng, he translated that to KISS Singapore, called KISS Sing. So, so that's been circulated a lot. We use this document in Malaysia. We just launched it with brought lawyers and VCs together, and we launched that. It's called KISS Malaysia, short for Kiss My. So, so we want to launch this in Thailand. I have no idea what it's going to be called. We want to launch this in Indonesia. We want to launch this in every country. So every founder and every VC can just use free legal documents and just get that shit out of the way so real companies get built. So apart from that, process transparency. Like founders have questions. A lot of new founders have questions. What's the process? What kind of terms? So at 500, what I want to do, and still in light green because I haven't rolled it out yet, is that, but we're in the works of it, we want to put out full terms we ask for, the timeline of steps, checklist to prepare all the documents for maximum speed, and we'll put this all publicly. So at least founders can see all of this stuff even before they decide to work with us. We want to make online applications that actually work, that we actually look at. Currently, like the way people reach 500 startups get money is so opaque. Oh, you gotta know someone, make an intro here and there. What kind of like, it's who you know world? That's bullshit, man. There could, like I said, there'd be a kid in Medan right now who just is not friends with Koichi from KK Fund or not friends with Kwan or whatever, and they can't get an intro. That's not fair. What kind of world is that? So we want to give everyone a shot. Now, a week later after the deal gets done, I put a red line there because like there's a lot of intricacies of like deal process, but a week after the deal gets done, this is something we already do for all our companies. And we don't talk about it so much because we think it's not important, but I'll just say it. We give $250,000 of free shit. Amazon Web Services, SoftLayer, Google, PayPal, a whole host of stuff. 200 different services that you'd already spend on. Even if you got a 50K check, you're going to get 250K of free stuff or more. Press release. I've been doing this for the past 20 companies. I edit the press release. We contact different journalists, like our kind folks in Tech in Asia, but beyond that, also TechCrunch, Bloomberg, Wall Street Journal, so on and so forth, and try and pitch stories actively on behalf of the founders. Why? Because founders don't know people within, not all founders know people within Tech in Asia, at Bloomberg, and so on and so forth. So we want to play that role. After that, within the same week, we do a jam session. I've done this with maybe 20% of the portfolio. We sit down and just keep it really simple. We spend half a day. What's the KPI you're going to use to raise the next round? How are you going to budget to spend the money to grow, to hit that KPI? And what kind of hiring plan did you need? We get the jam session on, 1 week in, then we start moving. Oh, of course, plug you into the community as well. Our WhatsApp groups are ballistic. Then we start spending. Once you start spending your money, we've so far run 11 companies through a growth hacking service called Distro Dojo. We fly in a very qualified mentor from Silicon Valley down to spend time with our top companies. Our previous batch, we had Kfit, Bukalapak, Kita Bisa, Next Academy, Grab Taxi, and a few others with this custom growth hacking service. And we've committed to the Malaysian government to specifically do 100 companies within the next 3 years for this specific service. So yes, I mentioned the startup concierge to help you once you start spending, but corporate partnerships, where we've, a lot of corporations want to work with startups. Not all of them do it very well, but we found some, I'll give you an example. In Malaysia, there's one telco. What they do for the startups for absolutely free, SMS the entire telco database with a coupon. Absolutely free. And they did it for 2 of our startups already. So I'm going to talk to this corporate and make sure all of our startups get to see this, get to do this. And I'm going to go out there and find all the corporates who are doing good stuff for startups and make sure all my companies get access to this stuff. So it's light green because it's work in progress. Now lastly, for our next raise, we sent 3 companies from Southeast Asia to Silicon Valley to join our demo day for a very specific section for late-stage emerging market companies, because the US is now ready. The US is now hungry to put money into these deals. So we sent iMoney and a few others there. So that's the Silicon Valley pitch. And of course, our M&A service. Within our portfolio, we've already sold companies to Twitter, Facebook, LinkedIn, Groupon, Cisco, like you name it, we've sold companies to them. And all these people have bought our companies, they're our friends. We hired someone, Emily Chu, like she's completely rocking it. So she's already started to gather all those relationships and come up with a structured way for us to get our top companies sold to some of these big guys. So when you're ready for your next raise or beyond your next raise, you know, we can talk about M&A as well. Now with all of this stuff, right, let me tell you, this is a ton of work. This is a lot of hard work. But that's not something that we're afraid of at 500. In fact, like if you talk to my team, man, we just work all the time. And I lie to them. I said, hey, man, you get flexi hours. You get take time off whenever you want. You know, and the next thing you know, we're doing another 50 deals. So this is a lot of hard work because we want to take what we learn on what works and what doesn't work. We want to iterate on this and replicate this across the rest of the micro funds. Those of you who have been reading Tech in Asia, you'd see that we've got microfunds in now Norway, Japan, the Nordics, Japan, Korea, so on and so forth. So we're going to replicate this stuff. Now with all of this, this comes to my last slide. You can't change the world without other people's help. You can't do all of these big ideas alone. And lucky for me, I have like the best fucking team in the world. They care about me. They check if I'm all right. I check if they're all right. We have a lot of fun. We party together. We talk about stuff together. You know, even when we're not working, we would hang out as friends. So there's my Southeast Asia team. It's growing. You know, I kind of put 2 more pictures in there because they weren't in the same cab. The cab fit 5 people. And these are all the managing partners and some of the management team. Like, they're awesome, man. I just love these people so much, you know. And so with the right people in your team, like, you feel you can take on anything. So I feel really grateful for all of this. And lastly, just to remind us again, this is the world we're trying to create. That kid in Medan or Lithuania, or smart-driven, capable people all around the world, getting money and getting time to fix all the rest of this fucked up shit in the world, creating companies to actually solve things, create things. Super grateful that beyond my team, Tech in Asia has been incredibly supportive, right, throughout the years. Other medias, of course, co-investors in the crowd. Thanks to Sequoia, invested in 3 of our companies. You know, SoftBank, Tiger, the rest of them, co-investors as well. And of course, the founders. And the rest of you in this seat right now, every founder to be, thank you so much for what you're going to build, and thanks for allowing me and 500 to be part of your story. So let's do this. Thank you very much.